Okay, let's dive into this. Welcome back to The Explainer, everyone. If you've been following our journey through the first 12 strategies, you know we've been on the hunt for the ultimate trend-following system. I mean, trend following is basically the holy grail for a lot of traders, right? But it's plagued by one fatal flaw. A massive flaw we've been desperately trying to engineer out of our setups. We've dissected the golden cross, we decoded the EMA ribbon, we completely stripped down the MACD. But honestly, everything we've built so far has been leading up to this exact moment. Today, we're unpacking strategy number 13, the whole moving average. This is the highly anticipated climax of our entire moving average journey, and it literally fundamentally changes the math of how we read price action.
Ask yourself right now, what is the biggest enemy of a trend trader? Think about it. Is it sudden market volatility? Is it those super frustrating stop hunts? Or is it the institutional market makers trying to trap retail liquidity? No, none of those are the root cause. If you're sitting at a proper proprietary trading desk right now and you ask a senior trader why your system is consistently bleeding out in the market, they're going to take one look at your chart and give you a one-word answer.
Lag. Lag is the fundamental delay mathematically baked right into traditional moving averages. It's that brutal gap between when price actually shifts momentum and when your indicator finally wakes up to tell you about it. Let's think about the physical reality of a late signal for a second. Imagine the market bottoms out on a Tuesday. The price forms this perfect base, and it starts accelerating upwards on Wednesday, then Thursday. But because a standard simple moving average needs 10, 20, or 50 past candles to compute its value, that heavy weight of last week's downward data is literally dragging the average down. It simply cannot realize that the trend shifted 3 days ago. By the time it finally crosses over and gives you that buy signal, the move is already totally exhausted. This is exactly what traps traders in late signals. You end up buying the absolute top of a move and selling the absolute bottom of a pullback. Honestly, this single glaring flaw is exactly what we've been trying to solve for 12 straight strategies.
Section 1, the enemy called lag. It's basically like trying to drive while only looking in the rearview mirror. Let's move to and see how this builds a clear visual spectrum for our trading tools. On the left side, we have the high lag environment. These are your foundational strategies, right? The SMA 50 and 200 that we used in the Golden Cross, and your standard MACD. They are incredibly reliable and safe, which is exactly why everyone starts with them. But because they treat all data points equally, they are incredibly slow to react to new information. Now, on the right side, we have the low lag environment. This is where the math gets seriously advanced. It prioritizes recent price action over ancient history, moving us from the triple EMA straight into our ultimate destination, the Hall moving average.
58%. This number is the absolute mathematical ceiling for those foundational, high-lag tools sitting on the left side of our spectrum. Think about it. Strategy number 1, the Golden Cross, gives you a 58% win rate. Strategy number 8, the MACD, also gives you exactly a 58% win rate. They hit a brick wall. And here's the thing. When you try to speed up a simple moving average just by making it shorter, it just gets incredibly noisy and erratic. No matter how much you try to optimize a simple moving average, its inherent mathematical lag prevents it from ever breaking past this hard statistical ceiling.
But now, look at the contrast here. 62%. This is the elite tier. This win rate is only unlocked when we eliminate lag and move entirely to the right side of our spectrum. By shedding the mathematical dead weight of simple averages, we instantly capture an additional 4% statistical edge across massive historical datasets. And we really need to pause and think about what that extra 4% actually means in the real world. For a quantitative trader executing hundreds of trades over a year, 4% isn't just a minor tweak. It is the literal difference between treading water and generating serious compounding returns. It transforms a break-even system into a highly profitable portfolio simply by shaving off the delay and getting you into the exact same setups a few crucial candles earlier.
Section 2, Evolution of Moving Averages. Let's look at how we actually went about fixing this lag problem. You see, the first major leap forward for quantitative traders was the transition to exponential moving averages, or EMAs. By front-loading the calculation to give significantly more weight to recent candles, the math became dramatically faster. You'll probably remember this from strategy number 10, the triple EMA cross. That was the vital bridge that first bumped our win rate up to 62%. But it still left room for ultimate optimization. Why? Because EMAs, while definitely faster, create a pretty major problem in choppy markets. Since they overreact to one or two volatile candles, they can introduce a massive amount of noisy false signals when the market is just grinding sideways.
Moving on to Section 3, Enter the Hull MA. Now, what's really interesting about this slide is that it introduces the final, ultimate form of our low lag spectrum. Created by Alan Hall, this indicator completely re-engineered the moving average math to be incredibly fast, aggressively hugging the price while somehow remaining remarkably smooth. So the crucial point here is how we actually set this up to capture our edge. We use a precise two-line configuration straight from our source material. First up, we have the fast momentum line, which is set to an HMA 14. This is your trigger line. It's hypersensitive to immediate momentum shifts. Second, we have the macro trend filter, which is set to an HMA 50. This acts as your structural anchor, keeping you perfectly aligned with the broader market direction. Together, these are the ultimate refined tool. Section 4, the 14 and 50 settings. Let's see how clean and objective this actually gets. When you put these two specific lengths on a chart, the Hull math practically eliminates all of the traditional noise. You don't get the messy tangles or those frustrating false crossovers you so often see with simple moving averages during consolidation periods. So here is the exact quantitative application. Step 1, identify the macro trend with the HMA 50. If price is above the 50, you are strictly looking for long positions. If it's below, you are only looking for shorts. Simple as that. Step 2, trigger your low lag entry with the HMA 14. When that fast HMA 14 flips in the direction of your macro trend, you strike. It's clean, it's entirely objective, and it cuts out absolutely all the emotional hype. Just stick to the math. Which brings us to Section 5, the 62% edge. Let's talk about this massive statistical advantage. And this brilliantly illustrates the peak of our narrative arc. This right here is the exact statistical advantage we have been hunting for since day one of this explainer series. Strategy 1, the golden cross, sits at 58%. Strategy 8, the MACD, also sits at 58%. But towering above them both is Strategy 13, the Hull moving average, at a solid 62%. The HMA absolutely dominates the high lag strategies because it gets you into the trend earlier when the momentum is fresh. And crucially, so crucially, it gets you out before the inevitable reversal crushes your accumulated profits. You are entering faster, you're exiting sharper, and you're leaving the lagging crowd totally behind. We have been trying to fix lag for 12 strategies, and we finally have the answer. The Hull moving average is exactly the optimization we were looking for way back when we started with those simple two-line crossover systems. It is the absolute evolution of trend trading, perfectly proving that when you fix the math, you fix the strategy. So, I'm going to leave you with this final thought today. You know the 62% win rate. You have the exact 14 and 50 settings. The math is laid out clearly right in front of you. The only question left is, are you still going to trade with leg?